Today, we're going to talk about fair value gaps. This is a price inefficiency on a candlestick chart representing an imbalance or a strong buy or selling pressure that causes the price to move very fast. This usually leaves behind a gap or a void where little trading occurred, and most times, price always comes back to that particular place to fill it up and then continue going into the same direction where it came from. Fair value gaps are a three candlestick patterns. We can see that in the diagram above. If you look closely, candle 1 and candle 3, their wicks do not overlap each other, creating a sort of a gap in candle number 2. This creates what's called the fair value gap. It's assuming that price is going to come back to it at some point and fill it up. The fair value gap does have some variations though. We have the volume imbalance, we have the gap, and then we have our normal fair value gap. There's also another part of it that's called inverse fair value gap, but that's going to be for another video. There are three different types of entries when it comes to fair value gaps. The first one being from the start of the fair value gap, the second one being from the 50% or what is known as consequent encroachment, and the last one being the fair value gap fill. Usually, we see this one when we're suspecting an order block close to the fair value gap. Fair value gaps come in two sides. We have one that's called CB, sell side imbalance, buy side inefficiency. And then we have the BC, the buy side imbalance and sell side inefficiency. These are basically the bearish and the bullish fair value gaps that we have in the forex market. Now, we are going to look into some examples of it and let us see how we can trade the fair value gap. For this example, we're going to be looking into an entry from the beginning of the fair value gap. In this example, we can see here that price is breaking structure to the upside, but then we don't have any PY that has been used within this range. But something that we can observe here is that we do have a fair value gap in this area. So we're going to mark that out using a rectangle. So we have the beginning of the fair value gap, the middle, and the top. This is the high, this is the low, the fair value gap. So we're going to be using it from the low. All right. Now we're going to be using a long position to place it here. Your stop loss behind the previous candle. And where are we going to aim? Let us aim for a 1:3. This here is a 1:3. Now we're going to play and see what happens next. Let's be a little bit fast about that. Let's push this to the side. We can now extend our targets, but as you can see, it triggered from our entry. Now it's moving up. This gives us a 3.69 risk to reward ratio. And eventually we hit our target there. In this example, we're going to be looking into JPB, JPY. As you can see here, price seems to be on an uptrend. We broke this high, so there has to be something here that's going to make price to react to before going up again, right? So now we should be at the discount area of the range and we should be expecting buys anytime soon. So let us play and see what happens next. I want to give a pause here because I noticed something. We swept this low over here. This here was a sweep, and now we see a break of structure, okay, to the upside. So basically, you would want to mark that break of structure, okay, and wait for price to retrace back inside this fair value gap. And if that's the fair value gap that we're looking for the retracement, where should we aim to? I would aim for this highs over here. This here is what we have as liquidity, equal highs. So we have there our liquidity, which should be our target. We have there our break of structure, our fair value gap. So where are we going to enter from? The top of the fair value gap. I'm going to use my long 2 from the top of the fair value gap. Okay, so we're going to come here, use our long 2, place it at the top. Our stop loss is going to be in the candle, in the first candle of the fair value gap range, and our target is going to be here at the very top. So let us play that and see what happens next. Tapped our entry, and now price headed straight for the liquidity, giving us a total of a 1:6.4. For this third example, we're going to be looking into USD JPY on the 1 hour time frame. Now, USD JPY has been on a downtrend, as can be observed from here. Okay, so what I want to do now is to wait for a possible break of structure or some other information that price can give us. So let us play and see what happens next. As you can see here, we just formed a breaking structure, right? And alongside that, we left out a fair value gap behind. We want to mark that fair value gap. We want to mark the break of structure. And more specifically, you want to know where price left from, okay? Which is around this area. Price had a reaction to this particular area over here. So we can expect price to come back inside this fair value gap and dump from there. Now we're going to wait for the retracement to start. This is where the retracement started. Personally, I like entering from the very middle of the fair value gap. Okay, so we're going to look into a way into which we can actually enter from that middle of the fair value gap. So we're going to grab our short position tool, place it at the 50% or the consequent encroachment. Our stop loss is going to be in the previous candle. And where is our TP going to be? Just here at the low, giving us a 1:2.8. Let us wait and see what happens next. Price tapped into our entry, swept in our entry, and left from there. Hit TP. In this fourth example, I want to show you guys here that we also have another fair value gap. If you recall, this is from our second example, right, on JPB JPY. We do have here a fair value gap, all right, formed after we broke the structure once again. But now, this here is a break of structure also. So basically, this is also a break of structure, and the PY in this area has never been used. Such as that, we also have endorsement liquidity from here, just above the fair value gap. Okay, so what we're going to do now is to mark the fair value gap and wait for price to come and trigger it. But this time around, we're going to be using the 50% of the fair value gap. I'm going to put my buy here, my stop loss below the previous candle, and where is going to be my target at the stop here, giving me a 1:2.5. But now, there's a way to actually make things better, all right, which is by refining our entry. So basically, when you want to refine your entry, you go from a higher time frame to a lower time frame, but then When you're refining your entry, you want to look for the same POI or a better POI inside the range of your previous POI, meaning that as you're seeing this fair value gap here, I want to see another fair value gap inside this fair value gap for it to be valid. If you now go down to the 30-minute time frame, what do we have there? Is the 30-minute time frame. And as you can see from here, the 2-hour fair value gap is no longer here, or at least not completely. This here was our breakout structure, and then we can see here that if you refine it to this particular zone, you're going to have this as your fair value gap. All right. So this is now our fair value gap here. Where are we going to enter? We are going to enter from the 50% of the fair value gap. Okay. So let us play and see what happens next. Price tapped into the fair value gap, okay, and kept on going up from there. Now, this is where our broadcast actually stops, or our replay actually stops, because this is the price from Friday. All right. Now, as you can see here, we also have another fair value gap forming here, and we broke through this high and through this one here, meaning that you can actually expect this fair value gap to be used. We had a new break of structure to the top side, showing that there's still bullish pressure there. Basically, this is the same story that we had here. We had this fair value gap, now we have this fair value gap, and now we have this one over here. Okay. If you like this video, please don't forget to subscribe and drop a like. Also, I want to give a shout out to Go Charting. This is not a paid advertisement, but the platform which we use to analyze today is called Go Charting. All right. You can use this platform to actually trade and actually use their replay tool, which is what I use mostly in this platform, to backtest, okay, and make sure that your model is working, that your trade, your strategy is actually working. So if you want to check it out, the link for this platform is in the description. So be sure to check it out and test your strategy over there as well. Okay. Thank you.